what is an NFT to you, and what limited or unlimited experience can either of you share or both of you share about NFTs?
You are now tuning in to Kickspot with Jinu Park and Migs.
And we're back at the Kickspot. We just want to say we're sorry that we haven't put content in a long time.
Long ass time.
COVID has taken its toll. Not just us, but the podcast. Not saying that we got COVID, but it's just looking at Migs' Instagram. I think it looked like he had COVID.
I don't have COVID.
But we're back. We appreciate you checking out our content still and showing us some love. We've had a lot of people reach out to us asking us to continue our content, and so that's why we want to apologize for not putting it on. But we're gonna still continue to do our Kickspot show. And screw COVID.
And we back.
And
we just got the news from, the CDC, the new guidelines.
No more masks.
No more masks unless you're fully vaxxed, so super excited about that.
Yes, we are. It's going to be a new change, but, interesting because, you just never know who actually got vaccinated or not, right?
Right. I could just pretend that, to be honest with you.
Yeah, but we're both vaccinated. We got a special guest in the house as well, too. Ara, you want to introduce yourself?
Hey, yes, I'm very glad to be here. I'm Ara Ghanbarian. I'm with Pounder and Plensy. Excited to share a little bit with you guys about our new decentralized finance platform.
Right. So that's actually why we brought him along today, is to get educated on the DeFi side, of the auto world. So which will be not only educational for us, but it's going to be a lot of fun to talk about it. We're going to have a lot of questions. We're going to have a ton of perspectives about it, especially Jinu.
I'm the deeper questioner, man.
He's a deeper questioner. I mean, I go deep too. Don't best believe that, but not as deep as you, I guess. But anyways.
But a quick question for you guys. Sorry to interrupt.
Yeah. Go ahead, sir.
In your interactions with the people who follow you and watch your videos, do you get a lot of feedback or even just back and forth about crypto or DeFi or anything financial?
I mean, we've been wanting to talk about it. So I think you're like the first guest that we're going to have that's going to talk about it. So actually, it's pretty cool to get your kind of insights about the entire world. And obviously with Pounder and Plensy, we're going to talk about that. So why don't we get started?
Well, I think from like a financial standpoint, it was more like stocks.
But not crypto or anything.
Gotcha. So we've talked about crypto, but we haven't really gone deep into crypto. Especially when we were talking about stocks, it was when like everything was booming. Yeah. And it was like, man, we're making a crap ton of money and doing all that. And
now it's inflation.
Now things have been a little bit different. So, so crypto, it's going to be an interesting topic. So guide us through what is crypto for the people that don't really understand crypto.
This is perfect timing for this, given Elon Musk having just been a host on SNL. So I'll follow his lead and share that crypto is digital currency. It's typically underpinned by blockchain technology, which is, the bulk of the conversation. And there are altcoins, there are stable coins, and then there's Bitcoin, which many of us consider to be the gold standard in the crypto industry. But really, it's just another way to transact financially without using hard money, which we call fiat money. And it's becoming pretty prevalent in a lot of facets of life right now.
Right. So talk about Plensy, because I know that's going to be the main topic that we're going to have today. So, kind of break down for our listeners and for our viewers what DeFi is and, decentralized finance and how Plensy is affecting that world, especially in the auto world.
Absolutely. Thank you. I'll quickly share the genesis of how we got to Plensy, but in direct answer to your question, and you got to keep me honest today, because sometimes you'll ask me a question, I'll go roundabout and not give you a direct answer.
I'm going direct, man.
Okay, absolutely. And keep me honest. So decentralized finance is simply, there is no centralized body governing what we do. That's brought about by blockchain technology and decentralized ledgers. So now, instead of having a central bank controlling all the funds, all of us become transactors in this big, massive body of people all over the planet, which in and of itself expands the pool of economics. Instead of just here in California or in the United States, now it's global. We're all transacting with each other. And each of the coins that are coming out most often come out with their own niche. Like, you know, this coin does this and this coin helps do that. So you see a lot of creative younger people coming out with some really cool concepts. We're just, you know, in kind of an infancy stage right now, so we don't know what's going to happen. It's really exciting.
So you think this is infancy stage still?
Oh yeah.
So because right now I think the market cap that we're on is about 2 trillion, and then they're saying that it could go to 7 to 10 trillion, and we're still in infancy. Where do you think it's going?
When I say infancy, I mean that in multiple parts, meaning blockchain technology has been around for about a decade or so, ever since Satoshi introduced us to it, and we can dive into that later. But it's not a new technology, but its applications are so new because we're doing so many different things with blockchain. And, you know, we could talk a little deeper about blockchain because it's a pretty simple thing. It's new-ish, but we haven't seen all that many applications because we're trying to figure out how can we utilize blockchain for things like supply chain, for things like bureaucracies. And the difficulty becomes people realize that there's going to be mass sweeping changes because of what blockchain offers. And most often people aren't comfortable with change. So there's a lot of pushback toward that, especially when you get into the governmental realm. Imagine there's no more DMV. Everything is done.
I would love that.
Yeah, I think a lot of people would be happy about that. But I mean, imagine what that's going to look like to the bureaucracies. They're going to push back heavy because they don't want that. So we're new in that regard, and we're new in the regard of crypto. I mean, there are a ton of cryptos, and all we see on social media is buy this and Doge is doing that. But we're really early because of the fresh understanding of what blockchain is going to allow us to do.
How do you think you'd compete against guys like that invent Dogecoin and, you know, what is it, Shiba?
Yeah.
I mean, like, as of right now, people are thinking that it might be like a joke, right? And then they're making their own crypto, and then there are other cryptocurrencies that are coming into play. There's like thousands. So I think what's tough is to be able to use it as a currency. It's easy with like dollars because it's a universally the most popular thing. Bitcoin, I think, is going to stay around for a long time. But all these small players coming into the game, I think it's tough for them to compete against the big guys. So how do you separate yourself as someone, coming in and then competing against that mindset or the big guys?
Excellent question. I don't know if I necessarily agree that it's tougher for the smaller players to play in the space. As we all have heard, Doge started out as a joke, literally a joke. And, you know, it got popular, it got traction. And when you get someone like Elon Musk to really blow you up, you become legitimate and you start to grow. What we saw happening in 2017, 2018 was this craze of ICOs, initial coin offerings, where people were coming out with not really a coin, but a white paper explaining what a potential coin could do. And they were just all pump and dump. You know, people were putting a ton of money into these startups and nothing was coming to fruition. And I'm glad we're talking about crypto in specific because what we've developed technically started as a crypto coin in 2017 when the craze was hot. We saw a niche because we've been serving the automotive market for almost 2 decades now.
Correct.
And so we developed AutoCoin, but we saw what was happening and the lack of regulation, especially with no SEC involvement and so many people coming to the market with things that weren't real. So we decided to park the idea because it just wasn't time for it yet. It's since evolved into not a cryptocurrency whatsoever, but it's become a decentralized platform, decentralized finance platform. So it's called DeFi, serving the automotive industry initially with big plans to expand. So
are you serving mostly dealerships or are you consumer centered as far as your services is concerned?
That's a cool question because most often when a new solution comes to market, it's either very pro dealership or very pro customer. It's really tough to strike this balance where both sides win. In fact, I defy anyone to come up with an actual solution that's on the market today serving automotive that truly serves both sides. I mean, TrueCar really did try to do that by finding the best prices and getting people to dealerships. But if you kind of dive into the internal workings, it's not necessarily the case. I'm not going to bash TrueCar; they're a great company, but they're more pro dealership.
Got it.
So what we've been able to do, because we have so much experience in this space, we've felt literally all the pain points. We've seen so many dejected people who just got treated unfairly. We've been able to strike a balance and be able to help both sides literally equally.
And as far as R&D, what R&D did you guys do in order to kind of launch Plensy, or before even launching Plensy? Like, what kind of R&D did you guys do?
The amazing thing about R&D is I think it literally never ends, because especially when we're in what I still think is the infancy of this technology. What we started with was focusing on the ICOs, seeing what's coming to market, how these people are becoming successful, or what's making a lot of these people fail. And more importantly, what was the nonsense? What were the lies? And how do we avoid all that silliness to come to market with something real? So AutoCoin was initially intended as a cryptocurrency that people could purchase to buy cars with. And if the value went up, then great. Now my $500 payment went from $500 to $250 because the value went up. That was the intention. But again, like I said, the SEC wasn't regulating what was happening. It was this whole craze. Things were hot. So we decided to park it because of that. And now we've launched it as Plensy, or about to launch it as Plensy. But what we've been doing is stress testing the algorithms. So how it works is, and we'll dive into like the particulars later, but just to answer your question directly, and I still haven't answered your first question, I don't think, but it's decentralized finance. So what we're offering is a platform for people to come and get a loan without a credit score.
Consumers, you're saying?
Yeah.
Okay.
Any borrower.
Yeah.
No credit score is required. And that's, I mean, it's so important right now, because just to take a quick look at that market, right now in America, there's roughly 330 million people. And of those, let's say roughly 100 million are children or the elderly who don't need credit or don't transact with credit. That leaves roughly 230 million people that do utilize credit. Of those 230 million, roughly 55 million people right now are misscored. They have something wrong with their credit score. They don't know how to change it. They don't know about it. And they can't use their credit to actually get funding. Another 45 million people just don't have a score. And this is all according to Fair Isaac Company, who gives us our credit. If you have 100 million people out of a pool of 230 million people that just can't use their credit, just imagine the horrible implications of that. And that isn't knocking FICO. I mean, FICO's been around for decades, and they've done a lot of great work to help people. But the way the system is today, with the current environment of how people are transacting, it's just not working for a lot of people.
So I'm going to rewind because, I mean, you guys are in the auto finance world, and I'm definitely not. So you talked about Plensy, and then you're talking about Pounder, and as an audience member, I'm like, I don't know the difference between what the hell are these two? Yeah. Like, now you've explained Plensy with the AutoCoin changing over to Plensy, and I got a lot of questions revolving that. But what is Pounder? Is that like the parent company, and then your DBA is Plensy? Like, how's that?
Thank you for rewinding us. I'm glad we came back to that. You guys are rapid firing the questions, and I love them, but sometimes I forget. So Pounder is a product that we've developed in-house. All of our products are fully self-funded. We're a zero debt company. Several years ago, while my partner was working at a local dealership, he learned that a lot of people just couldn't get to the finish line. They had good income. They had a good intention to purchase a car. They had need to purchase a car, but they just couldn't get financed. And particularly, he noticed that was happening in the Latino market. Now, to kind of put that in perspective, last year alone in Southern California alone, Latinos spent $1.9 billion in automotive in SoCal.
Like purchases?
In purchases. So shame on anybody who doesn't want to serve that market. So we decided that was going to be our niche. So Pounder is a terminology used in automotive. When you walk into a dealership, if they see you wearing a Pounder shirt, everybody starts screaming, because Pounder's like if you sold a car and I was your coworker, I'd come up to you and say, well, how many pounds was that? And you tell me it was 5 pounds, meaning you just made $5,000 on that deal. So on the dealership side,
commission? That's like a commission.
Yeah, that's how much you made as your pay. On the dealership side, we're known as Pounder. To the world, we're known as Auto Latinos. So what we do is we use Facebook and Instagram to engage intending buyers who we know are Latino, who are within 25 miles of a store. And we give them very specific dark posts because now we know where they're at, who they are, what they're looking for. So we give them a dark post, which in Facebook terminology is a very specific ad just for you. So then once they engage us, we get their information and then we utilize that as a lead for the stores, for the dealerships. So that's the pounder side. Because we've learned so many of these people are good borrowers, they have every intention of making their loan payments, but they just can't get funded. That was the genesis for turning AutoCoin into a decentralized finance platform, which can serve these people without using credit scores.
Right, because what we also found as working in the auto world in the last 6 years is in the Latino world, like there's just so many opportunities that are missed based on credit score. And either based on credit score or based on income. It's almost like FICO was shutting people away, but they could pay the car loan, but because their score wasn't, it wasn't high enough, they were getting turned down for no reason. It was just like, what happened with that, right? So that's why like Plensy was like, oh, that's an awesome idea. Like, we could service X amount of people, and we could expand that out of the Latino world and use it for everyone.
So Pounder's initially the prospecting company.
Correct.
The prospects, and then Plensy would be the financial side, where they help the prospects with the financial aspect of it.
Exactly.
So Plensy, am I using like dollars to be able to qualify, or?
That's a great question. No. Do you want to take a little deep dive into how the process works?
Mm-hmm. Yeah.
Because the dollars come in after you've been approved.
Okay.
So you wouldn't pay for anything. So the service is free to the customers, to the borrowers, and there's a nominal fee per transaction to the dealership, which is a $695 flat fee. $695, which is actually very, very competitive in this world. I mean, fees from banks to dealerships can be upwards of $2,000, $3,000, $4,000 sometimes. So
this is per customer?
Per customer, per transaction.
Okay, got it.
So I'll walk you through like start to finish how Plensy works. And Plensy is going to be a two-part conversation. So the first part will just focus on lending, if you'll indulge me.
Okay.
Yeah.
So I'm the dealer. You're Plensy. You're the borrower.
Okay.
I'm Plensy.
You're Plensy, just for kicks.
Yeah.
So you come into me and you pick out a car. And let's say for round numbers, it's a $25,000 car. And you're really interested in it. So I have you come in and we go through the Plensy platform. So first you log in with your thumbprint and we take a facial recognition. We're utilizing the same technology that's being utilized by Homeland Security and TSA. So we know we're solid there. So now we know it's actually you. In lending today, one of the biggest problems is straw borrowers, people who are just using other people's identities or social security numbers.
All day.
It's 2021 and this is still prevalent.
All
Just
day.
crazy. And all that does is hurt everybody. It hurts the market, it hurts the dealerships, it hurts the automotive manufacturers. So we've alleviated that problem. Instead of us asking you for your social or for your FICO score or trying to get your FICO, we just have you log in through Plaid. Plaid is a third-party intermediary. They're very well known.
Oh, you guys work with Plaid?
Yeah, we do.
Man, they just got IPO'd, right?
Technically, no. What happened was a couple months ago, they were going to be acquired.
Acquired. I'm sorry. Yeah.
But no, you're right on track. For $5.9 billion
Correct.
by Visa.
Yep.
That fell through, and everybody thought, oh, wow, this is the demise of Plaid. Plaid turned around and raised $1.2 billion from their own internal employees, showing how much their own people believe in them, in the product. So you come in and you log into your Wells, your B of A, your Fidelity, your payroll, which is a new product that Plaid just recently rolled out. And now we see what you're actually transacting, how much you can really afford to repay each month rather than what your credit score tells you. And I could share story after story about how there have been unfair instances, like, an attorney who doesn't have much credit history but makes $500 an hour can't get qualified for a $350 Camry payment or Avalon payment. It just didn't make sense because he didn't have a credit score. So he's offered like a 20% rate because he's a risk, but the guy's not a risk, he's an attorney. And there's so many instances like that. But so we've alleviated that difficulty. We don't care about the credit score. And what's really great is because of this new offering by Plaid, even if you're a 1099 employee, so many people have jumped on the gig economy. They're driving Uber, Lyft, Instacart, not just to make ends meet, but because now they're making good money at it. But oftentimes that doesn't get reported as real income, so they don't get credit. They don't get credit for it. We've alleviated that problem now. We're able to take the 1099 income because of this new offering. So now we know exactly how much you're making, exactly how much you're spending, what you have in reserve, and there's a few other criteria that help you out. The reason why we call it Plensy is because it's a points-based lending system. So for P for points-based, LEN for lending, SY for system. So for each bit of criteria that you provide us, we give you points. We've kept it super simple, and there's only 4 tiers, A, B, C, and D. And whatever you come in at has its rate and its term depending on your tier. I always like to give a little challenge to people I talk to about this at this part and say, imagine you have a 620 score and you need to get to a 700 just to get a better rate on what you want to buy. Do you know how to do that? Do you know how to get to a 700?
I mean, it's going to take a minute. It could take a minute.
You lower your debt.
Yeah. I mean,
You have long-term credit. So if you have a credit card, never cancel it. Make sure you have
30% utilization on a credit card.
Someone's got Credit Karma.
I do.
You also spend it and then pay it. You pay on time. I mean, I don't know.
You got to have X amount of credit open and credit close. I think you have to have if you do get into, what's it called? If you owe something, I forgot. I'm blanking out right now.
If you owe something, like you're in debt.
No, not you're in debt. If it defaults, right?
You gotta owe your payment on time.
Yeah, you just gotta make your payment on time. But that could take months to years to get from 620 to 720 or 700.
Does it?
Well, you're both dead on. In order for any needle movement in your credit score, it takes 45 days. That's the bare minimum.
Yeah.
So whatever car you were looking at just now that you're jacked up about and you got a great price on, forget about it because it's not going to happen. That's the initial difficulty. Other than that, you had a really good point. Pay off your credit card. Definitely that can work, but because the 3 bureaus, Equifax, Experian, and TransUnion, don't communicate and don't have the same rules, what you do to augment one will likely hurt another. So you go and you pay off a $3,500 credit card debt, so you get your experience score up, hopefully, but then you see it hurts your other 2 bureaus, which definitely happens because this guy has a rule of you have to keep your credit balance. Percentage balance up, but this one says, no, if you pay it off, you're good. You go and you pay off a student loan, but you didn't have it long enough for the seasonality requirement of this bureau, but you had it long. So there's a lot of vague rules that we just don't know about, and they're never going to share with us that could help us or could hurt us.
And to add on to that, certain regions and dealerships can use any of the 3, and you just don't know which one they're going to use. So you're almost you're playing a blind game on what they're going to use, because if your Equifax at 580, but your experience at 700, and then your TransUnion is at 680, you're and then they choose your lowest one. You're but my other 2 is like this. That's a crazy game.
That literally happened to me a few months ago.
Oh,
I
really?
went in to get pre-approved for a mortgage, and on my Credit Karma, the 2 credit unions show me at 780 and 787. So I'm thinking, all right,
I'm good.
If the third one is less, it can't be that much less, I go in and my experience is 640.
Big difference,
How does that
right? How does
make
that
any
happen?
sense?
It's weird. Mine are all the same.
Yeah.
So I don't know.
They're fairly the same.
Yeah.
They're not the same.
Mine's maybe
thing.
5 points off.
Yeah.
It's not
I wish I could say the same, but I saw this drastic difference and I was baffled. So my first thought is, okay, Credit Karma is just way off. But then when I checked with the other 2 bureaus, they were actually pretty darn close, but Experian had me way lower, and I had to dive in and figure out what was going on. Turns out there was a $100 collection from Comcast 8 years ago that's still lingering, and I didn't even know I had it.
Tough.
Which happens so often with people.
Yeah.
So we've alleviated that issue. So now let's go right back to the process. So you've logged into your accounts through Plaid. I know exactly, the Plensy algorithms know exactly what you can afford to repay each month on the spot. You're given your tier, your rate, and your term. If you don't like it, we'll show you on the spot how to instantly go from a D to a C or a B or an A. Very different from what we see with credit.
How long is the process to be able to go from one tier to the next tier?
Literally 1 or 2 minutes. It depends on you and what you're able to provide. So let's say you've got a B of A, Wells, Chase, this, that, the other, but you only logged into 1 or 2 of them. So if you access a couple more of those, or your Fidelity account for your investments, or your payroll. The more you provide, the higher the points total becomes, and you can also bring in a co-borrower, or you could also add to your down payment or purchase one of our ancillary products.
Could it go the opposite direction? So if I knew I was in debt in like one of the banks, and I don't tell you that information, so I'm on a certain tier, and then I bring that in.
Won't you see it already?
No.
Well, no, that's an excellent question that I don't get asked often. Yeah, you'd want to play it a little bit smarter than exposing something you wouldn't want to expose. I don't want to advertise that, but yeah, you want to play it smart. You want to show whatever paints you in the best light.
So from one tier to the next tier, like if I'm buying a $25,000 car, right? What's the big difference in like financing?
Actually, that's another problem we've alleviated. There aren't a lot of differences. So to put things in perspective, if you have great credit, you can get 0% financing with some caveats. If you have good credit, you can get good rates, 4, 5, 6%, which is still pretty good. It's not great and it's not bad. If you have bad credit, if you have really bad credit or no credit, your rates could be 20, 25, up to 30%, which is ridiculous, because if you're already in a position where you've got bad credit and you're trying to get out of that hole and buy a car so you can go to work or use it for work, and I put you into a 30% loan on a $25,000 car, I'm basically guaranteeing you're going to hurt yourself even more financially. So we've set our rates 4% to 9%.
Okay.
Super simple. Dealerships are allowed to bump up an additional 2% to make some more profit.
Yep.
But we've kept it really simple. So even if you're at a D and you want to climb to an A, we're not talking about this vast, crazy difference, but you're going to help yourself. There'll be a lot of benefit from going from 9 to 4.
Okay. So then let's continue the process. Like, so I fill everything out. I'm like an A tier. And then what happens after that?
So not to correct you, but there's nothing to fill out. This is all digital.
Digital, yeah.
Yeah, it's all via smart contracts. So everything is done almost instantly. And our aim is to take the car buying process from a 2, 3, 4, 5 hour ordeal to less than half an hour, which is so ideal for us because we get to be in and out of these dealerships quicker. And for dealerships, it's great because now they can bring in more and more people and get them cycled in and out faster.
Exactly.
So again, both sides are winning. So you've logged in, we've seen everything. We give you a tier A, you're at 4%, 5 years, you're happy with it. As soon as you agree to accept the deal, the dealership has one caveat. They have to go live with our GPS because that's how we're going to protect our asset, protect and track our asset. We sell 4 ancillary products in general, and there's a few other ancillary products coming on board, like tire protection. And
can you talk about those?
Absolutely. So the primary is the GPS alarm, which we have to have.
They have to accept that.
Absolutely.
Okay. What if a consumer doesn't want to accept that?
Then they won't be funded.
Okay, got it.
Yeah.
Okay, simple as that.
It's very simple.
Okay.
Yeah. Most often, we don't see a lot of pushback on that because it's just extra protection for the consumer and for the dealership and for the funder. But we're working with some extremely reputable providers that most people know and most dealerships have worked with. So it's the comfort level is high in that regard. And we are doing a rev share with the dealership. So they're incentivized. The other 3 products are gap insurance.
Of course.
Service warranty, which is extremely profitable for everybody. And we're rolling out our own vehicle insurance as well.
Got it.
So the only one that is a caveat that they have to go live with is the GPS alarm. When that goes live, we fund the dealership.
Do you think you can get a lot of pushback for that though? Because like there's a lot of people that even with like COVID tracing, they were against that.
Privacy issues are always going to be paramount, especially in 2021. But in all fairness, this isn't set up in a way that we're invading people's privacy. The ping rate is extremely low. Like your cell phone is consistently pinging. These devices only start to ping the vehicle after payments have been missed and notifications have been sent.
So what is that? 3 payments missed, and then you guys are going to start pinning the consumer?
Yeah, that's still being finalized right now, the specific details about that. But I'm not at all trying to diminish your point, but this is a whole different game. It's very common for vehicles to have GPS trackers on them, especially when the customer understands that if you want this incredible loan without a credit score, the only thing the bank requires to protect their asset is this GPS, then they get it and they comply.
But like, so right now with even like apps, it'll ask you like, hey, do you want to turn on your functions or do you not want to turn off your function? And that was really based off the fact that all these big tech companies are getting sued for privacy. So you don't think that would bite you in the ass in the future? Like I would be like very, like if I'm like a shareholder in the future and I'm like looking at that, that's something that I'd be super afraid of.
I get that from your perspective. And again, not at all to diminish it. In this realm, it's not just a commonality, but it also is in the T's and C's and the terms and conditions before you sign on for your loan, before the vehicle is funded. You are made fully aware. It's kind of like, do you accept the cookies on this site? 99% of the time I click yes just to get that bar out of the way, just so I can go in. I know they're going to have my data. But within the terms and conditions, we are making it very clear that we're not seeking to track you. We will not be tracking you. This is simply to protect our asset. And we are absolutely within all legalities and guidelines to make sure that we don't cross any lines. That's been our primary focus, making sure everything is by regulation, by the book. That is a valid point, though. But I think for shareholders, from their perspective, it's a definite plus. It's a positive because you're thinking, all of the stuff that happened with Cambridge Analytica and Facebook and that whole mess, that was them taking people's data without notifying them and selling it with oftentimes pretty sinister outcomes. This is very much the opposite. This is a protection of an asset with full disclosure and notification. So I would argue it's fairly different. And within this realm, it's very common to have GPS units, especially in the commercial world, but even in the layperson world. GPS trackers are pretty common, especially now with the prevalence of insurance companies using them.
Would you so if I was just an average Joe and I wanted to purchase a car for like $200,000, for example, like the best of the best, and I don't qualify for any of the 4 tiers, can I still qualify for the 4 tiers?
So there are some limitations. The first that comes to mind is a loan to value. Typically speaking, in this world, in this realm, all in, you're going to be at about 135% loan to value, meaning if you're seeking to purchase a car for $10,000, we can approve you for up to $13,500 to cover everything that you're trying to get. So we haven't finalized the exact parameters of how much max we're going to loan out, but it really will come down to your ability to repay. And we're going to go max 10 years old on the vehicles that we will be funding.
Like 100,000.
Yeah. Well, we're still defining that.
Still defining that.
That seems super high, though.
Well, to put it, I'm sorry to speak over you, but to put it in perspective, right now, the average new car loan in the U.S. is roughly 33 and change. Yeah. And the average used car loan is roughly 22,000. That's our,
that should be the bread and butter. Yeah.
Yeah, that's our bread and butter.
Not 100K.
No. I'm saying, but because I'm in the world, so I see it that's normal. That's why ancillary products go 10 years, 100,000, because they're trying to make sure that, just like what Ara was saying, your ability to repay doesn't go over that loan to value. Because some banks will go up to 150, loan to value, just so they can provide that finance for the consumer.
So let's go back into after I'm done, I get the car. So the money conversation, is this in dollars that I'm repaying you back, or you said there's a 2-part conversation with Plensy?
You have cool questions, bro. I love your questions. We'll get to that cooler part in a minute, but let's round out the lending part. So just a quick recap. One flat fee of $695 to the dealership, which is awesome. That covers all of our costs. Initially, the 4 ancillary products, GPS alarm, gap insurance, service warranty, and our own vehicle insurance, ABCD tiers, 4% to 9% financing, everything done on the blockchain via smart contract, quick funding. regarding funding, if you're a great dealership, if you're run really smooth and you know exactly what you're doing, you're on top of things, and the people who are giving out the loans and working, the finance directors, if they're getting all the stipulations that the underwriters need right up front and everything, all the I's are dotted, the T's are crossed, you're getting paid on that car you just sold, if you're great, in a week or so.
Oh, so it's not technically, okay. So it's not funded right away.
Correct.
Okay.
I bet, like if you go to one of the major banks as a dealership and you fund this borrower, there are a lot of things that have to happen after the sale that before those things happen, you're not going to get paid as a dealership. So sometimes it's a little quicker, but on average, you're going to be around a week.
So I have a question. So that involves title and, an ownership. So what is your process involving titles with that? Because that's almost at the end of it. Perfecting that title.
So that's the fun part. So one of the major advantages that we offer to the dealership is as soon as you're done with your process, you've given us everything, we've approved you, all is good, and now they've gone live with the GPS, we fund them within 24 hours, which is a huge boon for them. The dealership for your loan. And then you'll start making your monthly payments as you normally would. And the question you've been itching for an answer about is, you will be able to pay in cryptocurrency. In fact, currently, our wallets are set up to even accept cryptocurrency, Bitcoin primarily, by investors as well. That is something that is kind of in the works right now because it's tricky. I mean, we all saw what Elon Musk tweeted about, they bought a ton of Bitcoin. It was amazing. Bitcoin went up as a result. And then today they come out and they say, we're not accepting. We're not going to accept anymore because of the climate effects. Okay, we get that and we respect that. How did you not know that as a gigantic global conglomerate that there were difficulties in mining Bitcoin that caused climate issues? Why did you get us so jacked up and excited about your purchase, $1.5 billion, and you're accepting it as payment, and then all of a sudden you pull the rug out from under us? So I think that's where a lot of the bitterness is with Elon Musk right now, because you knew. Why don't you just not do it or do it differently? But we will be accepting cryptocurrency. But to your point, so once it's funded, we assume title. We become the title holder as the bank technically. And then that's where the fund begins. So any questions on the lending part? Yeah, pretty simple.
Yeah.
Okay, question for you guys. What is an NFT to you, and what limited or unlimited experience can either of you share or both of you share about NFTs?
For non-fungible tokens is what it stands for. What I know, I don't know much. Well, I know it's pretty much the simplest form that I learned from it. It's a piece of ownership. So, for example, all these athletes, music like artists are now coming out with their own NFTs. Like Gronk just came out with his own NFT, which is insane. There's this dude, I forgot, Bipple, or is that his name?
You said it right.
Bipple. But he constructed 100 of these old NFTs and made it like an artwork, and it was sold for $60 million. Sold for $60 million, right? But I still don't understand how they are getting paid on that, and why is it worth so much money for these NFTs? I'm still confused on kind of how that world is. It's still pretty new to me. That's how I don't know.
I have no clue.
I love it.
And if I'm wrong, tell me.
No, you're basically dead on. Non-fungible tokens, for us as lay people, it's a newer concept, but they've been around for years. It's just basically one of one. You said it exactly right. It's basically a representation of something. For people in their 40s and 50s, I've learned that a really good example to put it in perspective is, if you remember, you guys are probably going to laugh because you probably don't remember these, but Disney, whenever they make a cartoon, they can divide them up in little cells. They're called cells. Just a plastic sheet that's clear that has, say, like a picture of Mickey doing this. And there's hundreds of those that as you flip, they become a cartoon.
Yep.
If you purchase one cell, that's technically a non-fungible token, but it's a tangible one. It's a hard asset. And typically it'll be like number 3 of 300. So a token is just technically an interchangeable term for a share. Non-fungible, meaning it's just one of one. You can't fractionalize
replicate it?
Correct. You can't fractionalize it. So you mentioned Beeple. It's really interesting what happened, especially watching the interview of the gentleman who purchased that artwork. So it went for nearly $70 million.
Yeah, something crazy.
And it's basically larger thumbnails of a bunch of different pictures. It's a digital art form. And when he purchased it for nearly the gentleman that purchased it, when he bought it for nearly 70 million, I watched his interview and he said, not only is this a burgeoning industry, and not only are the applications just unlimited, but oftentimes it takes someone to be bold and step out and make this first big move that at the time seems crazy, stupid, insane. But I know that years from now, people will look back and understand what I did and why I did it and realize that I got this thing at a bargain. I'm being a pioneer.
So you're saying that 66, 70 million purchase is going to be worth billions later?
That's his thinking, and that's what he's sharing. And I don't see any reason to argue with that, because the NFT model and where we're going with it is just so unlimited. As you mentioned, Gronk came out with his own. Brady's about to come out with autograph.io.
So is Peyton Manning.
So many, and artists are doing it because there's a market for it. Like right now, there's an exchange called Rarible that you can go to and just, if you just browse through it, there's some really, really cool art.
I have a question, Ara.
Please.
So I wanted to talk to him because I was like, hey, let's make our own NFT for Kickspot. Like I want to make like a first Kickspot NFT, because imagine if let's say we blow up. Right, we blow up and somebody buys that NFT, we sell it for like $1,000, and then we blow up. That thing could be worth like 5,000-10,000 2 years from now or something. But how can we make our NFTs? Like, what do we go about? How do we do that?
That's the coolest part about what we're going through right now. It's the Wild West. Everything's wide open. Obviously, you guys are creative. Just put your creative minds together. The best way to do that is to kind of surf through what people are doing and pick up ideas that stir your creative juices, and then come up with your own flavor of something that is becoming more and more accepted and that people like. I'm not saying copy what other people are doing, but understand the marketplace a little bit better. And that's why I mentioned Rarible. So if you go to Rarible, you'll see the type of artwork that people are posting and auctioning. And you'll see how much they're going for. And if you kind of check in once in a while, just like we check in with Cash App, or with Robinhood, I just like to see where the stocks are at, how bad they're doing today. You said something earlier I wanted to tell you. I wake up each morning now because of how the markets are just acting crazy. And I get my notifications from Robinhood and Cash App.
Yeah.
Each morning I wake up with like this cringe, like how many notifications am I going to see for this is down, this is down, this is down. It's been a rough couple of weeks.
Yes, it has.
But no, the answer to your question is you work with, as creatives, you work with your creative team and you come up with what is you, and it's your style. Jack Dorsey just sold his first tweet for a couple million. So when I say it's wide open, NFTs are everything. We're making cars NFTs. Athletes are using their old shoes as NFTs. I mean, so it's just so much fun to play in this space because there's a lot you can do. So for us, for instance, like we're working with a team that's developing.
So I guess that was my question. Do I have to ask a developer to help me? Like, let's say if I want to create my own NFT and I have an idea in my head, I was like, can I make it myself, or do I need a developer to make it for me?
Either or, both can work. It just depends on your knowledge level and your ability. But and I'm gonna give a quick plug here because I have a good friend here named Rob Beck, who's with Be Creative, and he's one of the most creative people I've ever met, and he's in the process of starting an entire NFT platform, and he would be a great person to work with to get some ideas. So Rob, big shout out. I'm going to share your information with the guys. But yeah, I mean, he saw what was happening. He fell in love with it. He's super creative. He does a lot of 3D printing, that type of stuff, a lot of modeling. So he started coming up with ideas on how to sell it. And now he's making a business out of it. So kind of the same start as what you're talking about.
That's what's up.
So that's what Plensy is? Like,
no, not at all.
No, not at all. No. NFT is completely different.
We just got off on a NFT
he just
tangent.
asked us what an NFT is.
I'm like, how do we?
So where are you going with that?
Those
Ara?
two don't jibe.
Yeah.
Okay, so we talked about the lending side. What we're doing as a secondary vehicle for our platform is really new. It's a little bit crazy. It's different from how we started it, because what we were thinking was to take that asset now and allow tons of people to be able to buy a piece of it, to fractionalize it. Unfortunately, we're just not there yet as a country, as an economy. We're just that the rules haven't been fully defined for that. And what's really interesting is even if you go to attorneys who are financial attorneys who have played in the crypto space, who know the space really well and work with the SEC, even the attorneys who are well seasoned in this area, they can't give you direct answers because they don't know yet. I mean, right now, the SEC is trying to sue XRP Ripple, something that happened years ago. As a general public, we see that they don't have a leg to stand on, but they're still pursuing it because the laws are just so vague. It's kind of like cannabis 7 years ago, 8 years ago. Everything was vague. People were going to prison for growing plants. Now people have plants just all over the place. So we're in this weird early stage, again, infancy, because the SEC is figuring out how to regulate things. And at the same time, what's happening is a lot of countries are almost at market with their own digital currency, which is going to compete with cryptocurrency. So a lot of things are super fragile right now. And we could splinter a lot of different ways. We still haven't touched the NFT for Plensy yet, that problem.
Yeah. But I think, just to kind of add on to what Ara was saying, I think also like one of the fears is, Warren Buffett spoke on it in his summit, recently. I think it was last week. He was talking about the reason why he's not supporting Bitcoin and all the altcoins is because of the criminal activities and the criminals using crypto for their benefit. And I think that's also, striking up conversations everywhere. If Warren Buffett is saying that, that's kind of a big deal, right?
Yes, and far be it for me to at all think I could say anything that man does is wrong. And to prove his point, we all saw what happened with Colonial Pipeline. Mm-hmm. They caved and they paid off terrorists for ransomware, mm-hmm. which is such a dangerous precedent.
Wasn't it with Bitcoin?
It was with crypto, and they paid $5 million to supposed Russian hackers. Yep. All we're doing is setting a horrible precedent by doing that. But who knows the details of what they were going through, and we saw the result in gas prices, so I'm not there to judge anyone. But to answer your question, I think Warren Buffett might be a little off on this as an investment vehicle, as a transaction vehicle, in that when I first started purchasing Bitcoin roughly 3-4 years ago, a lot of the older people who I have a lot of respect for, who are financially sound, just told me, this is another tulip craze. And if you know anything about the Dutch tulip craze, I'd encourage everybody watching, just Google it because it's funny. Roughly 400 or 500 years ago, tulips became like this form of currency, and tulips die pretty quickly. So the value just went to this crazy bell curve, and then it just completely bottomed out, and it was hilarious. So a lot of people thought that Bitcoin especially was the new tulip craze. It's proving that it's not, and the funnest part of my day is as Bitcoin goes up in value, I take screenshots and send it to these guys, and I keep telling them, get in. It was 13, now it's 16, 19, 20, and then now, since it hit 63, 64, and it's come back down to 49, I'm getting their text messages with their screenshots, 59, 58, 57. So it's a little bit back and forth. Yeah. So, I don't know if I necessarily agree with him. I think the play with Bitcoin is definitely a longer term play. I'm not necessarily a big fan of altcoins like Ethereum and Doge, but there's definitely a marketplace for them, and people do transact in them, and Dogecoin's popularity is skyrocketing to the moon. So I don't have anything negative to say about them, but everything in investing is a risk.
It is, yeah.
Right. As the government controls more of the market right now, when we get into crypto, do you think celebrities or influencers are going to be the next government?
I hate to answer a question with a question, but I have my answer, I promise you, but I'm curious how you would answer that. And I say that because of our age difference. I think influencers are more prevalent.
He's older than you, by the way.
That's great, bro. I think they're more prevalent in your life than in people in their 40s and 50s. Maybe that's a misnomer, but I'm curious what you think of that.
Well, just the fact that Elon Musk had all that influence to really lower, the crypto world instantly in a second. I think that these influencers do have a huge influence. And so I would be worried about the intentions behind, certain influencers, certain celebrities, and the reason why they're using crypto.
I agree. I think it's a little bit different, though, because the government is just so vastly powerful. The moment the government decides to stop something, it's stopped. I mean, literally the greatest economy in the world was stopped in a very short time because of a pandemic that hit, and the government said, no, we're stopping everything. So to your point, yeah, guys like Elon Musk and other major influencers can have a very major impact, but I would argue that impact is limited, it's more confined, and it's most often more of a blip. And absolutely there are bad actors everywhere. But if you're going to be a prominent influencer that has an appeal and people do follow you, when you become a bad actor, you get revealed pretty quickly. And once you're exposed, then your influence is severely limited. And I'm not at all talking about Elon. I think what they did was a misstep. I don't think he's a bad actor. A lot of people now, like you'll see these terrible memes saying they're not your friend, they're trying to harm you, this is all about their pocket. I don't necessarily believe that. I think he's pretty spontaneous and he says things a little bit crazy. He smokes blunts on Joe Rogan's podcast. Hey. And, a lot of people love that. A lot of people hate that. But I think that influence is limited and it's shorter term, whereas the government, like right now in India, they've clamped down on usage of cryptocurrency so heavily that people are being threatened with decades of prison time for even owning Bitcoin. You can't even have Bitcoin as an asset or else you go to prison. So, and that's a country of well over 1 billion people and they've shut it down. To the point of people in India not even wanting to have wallets out of the country. So I think influencers can definitely have a pretty strong effect, but it's shorter term, whereas governments, especially in the US, because we've become so prevalent, you've got JP Morgan, you got Tesla, you got a whole host of BNY Mellon creating exchanges for crypto, purchasing their own crypto, doing transactions in crypto. The government gets it, and I don't see, even when the dollar becomes digitized, I don't see crypto being damaged by that. In fact, a law of finance is that anytime throughout human history, whenever there have been two concurrent currencies in a society, one naturally becomes more valued while the other becomes undervalued. And we're seeing that happen right now with fiat money, the dollar, and with crypto. We're seeing crypto slowly creep up, and a lot of it has to do with these influencers, but a lot of it has to do with we all want to get in on it because we want to get in early. So we're seeing the dollar become more and more devalued. The political climate is helping that advance. And then we're seeing the crypto really creep up. And we see these blips with what Elon did, but the overall trajectory is, it's upwards.
So you're saying, you said it earlier, you're saying we're still in the infancy stage. So what do you think, just your opinion, Bitcoin's price will be 24 to 36 months from today?
Again, I hate to answer questions with questions, but if you wouldn't mind telling me what you think it's going to be.
I think it would be, I don't know, reading graphs and stuff. Like, I don't know. I think next year it should be easily at 70,000. Like next year, like same time next year, 12 months from today, 24 months today, I wouldn't be surprised if it goes over 100,000.
I
think I'm right there with you. Jinu, your thoughts?
I think if Elon comes out again and said some stupid ass shit to lower my Bitcoin,
I'm gonna lose it.
But I would say about the same.
Yeah. So I've got a really, really good friend who's next to genius level, who got in on Bitcoin from like the get, and
like sense wise.
I'm talking like 2013.
Oh,
yeah.
Like
I mean,
$5.
wicked smart, saw it,
yeah.
got in on it, is a Bitcoin purist to the bone. And he'll be the first person, if you sit down and ask him questions or talk to him about it, he'll tell you everything else is a scam, only go Bitcoin. There's a lot of people out there who are Bitcoin purists.
Even Ethereum is a scam? The main blockchain is a scam?
Is a scam. Wow. This is a scam. That's a scam. You know, that I respect that strength and fortitude in what you believe in. I don't necessarily agree because I took a pretty big hit when I sold my Ethereum when he told me to. But I feel based on what influencers are doing, what the government is going to be doing soon. I mean, they have to start regulating some way. I mean, they're chomping at the bit to do it, but it's so complicated because, again, we are in technically the infancy stage. I do believe, all things considered, we should be within the next 4 years, if predictions are correct, well above 250,000 per coin. Probably closer to 400,000, depending on the applications that we utilize Bitcoin.
I mean, that just means every altcoin goes up with it.
That is the assumption. So the assumption with Ethereum is it's at a 1 to 2 of Bitcoin.
Correct.
And if that holds, I mean, look at what they're doing. They're facilitating so many things through smart contracts.
We'll be all right, bro.
Yeah.
We'll be all right.
Well, there are certain coins where I would question it too, and I understand your friend saying that. I mean, the .com boom was a pure indication of fake companies that started and, you know, people investing into those fake companies. And, you know, it does make sense. That was my thing from before with like Dogecoin and all those things. Like I could see that those being fake, even though I bought into it, but I could still see it being fake. So I'm like a little hesitant on those, but Bitcoin, I think Bitcoin is going to be around for a long time.
And it's so funny how in almost every facet of life, FUD and FOMO take place concurrently. So FUD is fear, uncertainty, and doubt, and FOMO is fear of missing out. So we to Jinu's point, we want to get in because we don't want to miss out. You know, I want to get Bitcoin at less than $1, and hopefully it goes to $250,000. But then I have a ton of fear and uncertainty and doubt about is this real? Am I going to lose everything I'm putting? I mean, it's just. It's mental torture that we're putting ourselves through, but at the same time, I think it's kind of fun.
I mean, I think it's fun. I like to risk it to get the biscuit, as I always say. You know.
So I do want to ask, like, so who is Plensy backed by?
Before I get to that, may I please finish the NFT portion
so
we don't get off track?
Yes. Okay.
Because you guys ask great questions. We go off these tangents, but I don't want to forget it.
Yeah.
So we talked about the lending side. We talked about what happens when we fund the dealership. Yep. So now we've taken the asset. It's ours. So let's go back to your example. Let's say it's a $25,000 loan, 4% for a 5-year term. So now it's ours, and we can turn it into an NFT, a non-fungible token. And what I was sharing earlier was we were thinking about making it fractionalized so a ton of people can buy it just like Bitcoin. That's not in the cards. So we're doing a 1-for-1, meaning let's say there's a fourth party here, and this person is an NFT holder. They're an investor. So I take your $25,000 loan that I funded to the dealership, and I take that asset and I sell it to this person, which is very common. So in the mortgage world, banks batch loans. So they'll take like 100 A paper loans, 100 Alt A, 100 subprime, and they'll sell them to investors because then the investors can make that interest income over the years. So we're following a similar model. And what we're doing is we're taking the asset, we're selling the title, and now the NFT holder comes in and they pay me a premium. So that 25 grand, they give me the 25 plus a 3% premium. And let's say it's a 4% interest rate. We take 20% of that 4%. So the remainder, let's just say for even number, is 3%. So for the life of that loan, they're making 3%. The cool part is it's two-part actually. We're servicing it for them, so the NFT holder doesn't have to do anything. They've just given us the 25 grand plus the 3% premium plus a little bit off the top of the interest rate, and now they're just making money. And it's a long-term. I'm collecting money every month. The first question I'm always asked is, well, what happens if that borrower, what happens if Jinu defaults? Or if he refinances?
Yeah.
We are contractually guaranteeing that loan, those payments to the NFT holder for the life of the contract. It's contractually guaranteed. And how we do that is everything we sell, so the 25 grand on the car, the $695 processing fee, the few $100 for the GPS, if you bought the gap insurance, every bit of that, we take 20% of the gross profit, we put it in reserve. And to put that in perspective, right now in the US, the default rate on automotive loans is roughly 4.5%, 5%.
Seems low.
It is a little bit low, but in general, an average out is about 4.5%, 5%. During the 07, 08 economic downturn, it crept all the way up to about 8.5%, 9%. There are different instances and different ways to crack the numbers and look at it differently, but generally speaking, it's roughly 4.5%, 5%. We've taken 4x that and set it aside. So we know we're being a little overly conservative, but that's how we're guaranteeing the money to the NFT holders. So a quick recap. We fund the dealership. We become the owner of the vehicle. The asset is ours because we're holding title. We take that title. Now we sell it as a non-fungible token to an NFT holder. They pay us the full principal balance plus a premium on the balance and a small premium on the percentage, and they just make money long-term. That's guaranteed. Now that money goes right back into our loan pool, so we start loaning it again and again and again. So it's a self-regenerating process.
So it doesn't affect the consumer. They don't even know what's happening.
No, they don't. It's just like, when you get a mortgage, you get your mortgage at B of A, and then 3 months later, they've sold it to another servicing company. Your coupons are just different, but it doesn't matter to them because the rate stays the same, the term stays the same. So.
It's still kind of confusing, but I get it.
Is it really?
Yeah.
No,
Okay.
no, I completely get it. Like, because when I bought my home, like someone else is buying my title or whatever, or my mortgage. So I would always see different companies. I think throughout like the 3 years, it was like 8 different companies, but my rate never changed.
And your payment never changed.
My payment never changed. So someone was buying it, obviously on the back end so that they can make more money. So
Got
they're
it.
selling it. So
Okay.
it's similar to that.
Okay.
Yeah, very similar. Yeah, same process. This is just an NFT now. It's a non-fungible token. It's a very different model. No banks do this where they sell the paper that they've funded and then redo the process again. So we're really excited about it because it's almost impossible to create a business that has its own self-regenerating revenue. Typically, you sell something, you get the money, and then you spend it on something else. This is, you sell something, you've given the money, now you get the money right back. And the really cool part is the dealerships themselves can become the NFT holders. So they'll go through their report that shows all the deals that have gone through Plensy for them, and they can pick and choose which ones they want to buy. Now they become their own bank, and they're getting paid on that.
So they're double dipping?
It's not necessarily double dipping.
They're making a little bit more.
They're making a little bit more in the long run because we're allowing them to do that, because we're giving them that 80% of the interest. They're buying it and they're making money on it long term.
That's pretty smart.
So with Plensy, do you guys have valuation for Plensy currently?
So right now,
can I even ask that?
Absolutely, and I'll share everything I can share, and then what I can't yet, I'll of course leave out, but at least for now. But we're technically in what's called our investment roadshow. So we're doing 2 things concurrently. Because it's so rare for people to be able to bless the people they love in their lives, their friends and family, with an opportunity to come in on something that could be amazing, that could serve countless people and do financial miracles. We are doing our typical investment process, which is what every company does, but we're also doing a friends and family round. So right now, what we've defined as the entrance to get in on investing at this stage is $5 per share or per token. We use that interchangeably. 10,000 shares at a $50,000 tranche. So even if you're a non-accredited investor, if you're not like this big investor with $2 million in liquid assets, you can still come in and purchase pre-launch and be able to have shares in a company that's going to do really well. To put that in perspective, the first couple months of this year, because I work with dealerships, I was going to every dealership I could go to in Southern California, and I was feeling people out. I was talking to GMs, GSMs, general managers, and finance directors and telling them about Plensy. And it was a very pleasant surprise to see them not only jacked up about it, but wanting to be part of it in multiple ways. So I wanted to see if I could get them to put a little bit of skin in the game. And I got 57 dealerships to sign a letter of intent stating that when Plensy launches, we want to utilize your product and we're going to use it. So I would ask them a lot of questions like, typically speaking, in a month, how many people do you think you were almost going to get to be a customer, but you just couldn't get them financed? And at first, it's funny. They'll first think, oh, 5, 10. And then the more you talk and the more you talk about what Plensy can do and how it's not just for great credit people or bad credit people, but for everyone, then they realize, oh, wow, there was that lawyer that I couldn't get financed even though he makes great money. There was that family that had no credit. There was that other family that had that challenged credit, and it was this dumbest thing from a decade ago, but we couldn't. So then their mind expands, and they always tell me easily 35 to 50 loans I can do a month. How we've gotten to our valuation is we've kept it super, super simple and conservative. So even though we have 57 letters of intent, we're going to start the first month with only 5 stores, 5 dealerships. And those 5 dealerships, the only expectation is that they do 4 new car loans and 2 used car loans. So 30 total loans, 6 loans per dealership, 5 dealerships.
But they can do more.
Absolutely, they can do more. Because we want to really dive in and prove our model. We've been proving it by stress testing it, but now we're going to prove it live. We want to keep it tight, and we want to keep the numbers crazy conservative to the point of, again, even though we have 57 letters of intent in like a 3.5 week period, we've only forecasted after 5 full years, only 275 stores coming on board, which is wicked conservative given the fact that there's 60,000 dealerships in the US. So we're keeping it really clean, and we're saying each month, when the store starts, they're only doing 4 new car loans and 2 used car loans, and then every subsequent month adding 2 more new car loans and only 1 more used car loan. So even the scale is really conservative.
That's smart. I like that.
So what's the valuation?
That's hard.
That is part of our investor package. And we ask people to sign an NDA for that. So,
facts.
But just to give you an idea, what we're forecasting roughly is exponential growth from day 1 to year 5. So, and the valuation is going to change, obviously, when the first tranche of 25 million comes in. And Jinu, you had asked who are we working with. There's some very reputable players that we're working with. We don't share their information all that much, but one of the primary groups that has come to the table is Terraform Capital out of Westlake Village. Just amazing people who are gurus in the crypto space and the DeFi space. They understand it. And the best part of this process has been they really wanted to take a look under the hood. And our team, to say our team is second to none, honestly, is an understatement. Our CTO, his name is Murley. He was head of compliance and security for Citibank and Banamex. We have another gentleman who is working as technically as CTO, Charles Voltron, my favorite last name of all time.
Charles Voltron. Love that shit.
This guy is so wicked genius that as I'm watching the back and forth between Terraform Capital and our team and what Murley and Charles are telling them, it's like I'm getting a college education just from these back and forth emails and what they're sharing and how the processes work. And to see that and see the validation from people who get it and have done it and have been successful with it, it just gives us such a new sense of credibility.
For sure.
Well, I'm good.
I'm good on the questions. Oh my God, we drilled Ara here with questioning, dude.
That was fun.
That was very informative.
My gosh.
Very different niche than what I thought originally. What it was, and you're targeting a market that actually needs a product.
Yeah, 100%.
Which I am a fan of. Low-income communities often get left out in a lot of opportunities. So I'm glad you guys are catering to that and giving them an opportunity. So I think it's good. I think the model of selling the the certain amounts like to different people so that you can get your investment back, that's a smart idea. Because a lot of big companies are doing that right now. Like you take like Apple, for example. They don't just own Apple, but Apple Finance people, they will actually go into the open market and then reinvest their money and invest into different companies and just for like the day, make a crap ton of money and then reinvest it back into their company. So it's very similar. Not a lot of people understand that. A lot of big companies are doing that. For you guys to start off like that in a similar sense, I think it's very, very smart.
Yeah, and I think for me, it's the fact that you're not using FICO for consumers and you guys have your own algorithm. You guys have your own opportunities. Break it down into 4 parts. I think that to me is pretty big because, I mean, I've almost, I've experienced like not being approved for something because my scores did not communicate with each other. and they had to use one score because that was their policy and procedure, and I had to fall in that category, and it sucked, you know. So
I've been there.
yeah.
Thank you guys. This is awesome.
Yeah.
It's such a treat to be on with you guys.
Do you have any information like where listeners can go check out, you know, Plensy or
Thank you
any
for
for
that.
Pounder? Yeah.
Yeah. So Pounder would be much more focused only for dealerships. So that's something that we take a business-to-business approach on, and a little bit through LinkedIn. But if you're interested to find out more about Plensy, and by the way, when we launch, there's going to be a concurrent app that launches as well, which allows for borrowers to do things from their own home, which is just going to change the game in so many ways. But very simple, plensy.com, plensy.com. There's a ton of information on there, and then there's an area where you can ask us for more information. So we'd be happy to reach out to anybody that's interested.
Awesome.
Perfect. And we're going to definitely have to bring you back to see the future of Plensy.
Yes.
And what that looks like. We want to see, you know,
We actually might even
exponential growth.
be in, you know?
I definitely would love to do that with one condition, that we get to throw in some sports and talk some trash during.
Yes.
Oh, man. We're going to have you on NFL.
And maybe a bottle of Glen,
Hey.
which I failed to bring. My apologies.
Camus, you know?
Absolutely. that works. So if you all want any information, please check out our social media. At Instagram, we got _Kickspot.
Yep.
And then you can find us on YouTube. I'll just put the links right below as well, too.
Right here.
All right. Well, thank you for listening.
Thank you.
Appreciate you all
Ara,
for
thank
listening.
you.
Thanks, gents. Much appreciated.
Thank you so much, Ara.
Awesome.
All right. Peace.
Thank you for listening to Kickspot.